Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq Market site, we have Michael Shaulov, CEO of Fireblocks, Johnny Garcia, head of institutional at VeChain, and Max Cabasso, managing director on Nasdaq's Market Intelligence Desk. We're here to discuss the stablecoin landscape and its potential to be the backbone of the global money movement. It's great to have all of you with us. Welcome to Trade Talks, of course, Fireblocks, a guest of the show quite frequently. Michael, just give us a quick rundown, remind us where Fireblocks is within the digital asset ecosystem.
Yeah, of course. Thanks for having us. We provide infrastructure for most of the institutional part of the market that operates with digital assets, over 2,400 clients. And what we give them is basically all the capabilities to build wallets, custody, transfer, and issue assets on chain.
Thank you. And VeChain, newcomer to the show.
Yes, good to be here, Jill. So at VeChain, we're a foundation, and we specifically deploy our assets in support of the VeChain Thor network, which is effectively a layer 1 protocol. So thematically, we're focused on sustainability, both in the form of onboarding and incubating, sourcing new applications that effectively are putting the technology in the hand of end users. And then on the other side, historically, we've been focused on enterprises, right? So onboarding what, historically speaking, has been traditionally pretty difficult clients in the form of basically blockchain as a service. So that's a bit of us at VeChain.
And Max, it's interesting because on the Nasdaq Market Intelligence Desk, you are communicating with Nasdaq-listed companies, our issuers, directly, yep. And you're starting to hear, whether you're talking about the pipeline or just the environment in general, how digital assets underlying technology is becoming more of an everyday conversation in the more traditional space.
For sure. I mean, we're seeing, obviously, the treasury strategy that companies are deploying really started to pick up. That's obviously a large portion of it. Some of the exchanges in just the crypto universe, they're really starting to come. IPO pipeline for that is really starting to grow. And it's becoming a more normal conversation of tokenizing of assets, what companies are doing, how they're going to use the technology in their place, business. AI goes along with it. It's kind of progressing into the 21st century, really, of traditional technology landscape is one way, and now we're really branching into basically an uncharted universe there, in that sense of companies actually taking it seriously and building and developing in that space and showing that there is a path to prosperity there and growth as companies, and not just in the traditional financial market.
Yeah, and Michael, you're seeing that as a broader trend across the stablecoin landscape when you think about the evolution of what the global money movement is going to look like.
Yeah, I mean, I think that from a traditional use cases standpoint, or mainstream finance, actually, stablecoins are definitely the first use case that we are seeing hitting, I won't be shy, probably say, early majority, right, in terms of access and usability. In Fireblocks, I mean, to be fair, just to go through the numbers a bit, last year there were more stablecoin volume than Visa and MasterCard combined, so that's huge. Fireblocks, we are now, through our infrastructure, there is over $500 billion a month of stablecoin transactions and movements, so it's picking up quite nicely. And maybe the most interesting thing is that we are seeing payment service providers and now even banks coming in, but payment service providers, we have over 300 payment service providers that are already using stablecoin as part of their money movement operations. And banks are now basically coming in to figure out how they're going to play, especially after the Genius Act passed.
And it's interesting, Johnny, because we tend to think of this particular conversation around digital assets from an investment perspective, US, very Western-centric thinking, but the fact of the matter is this underlying technology has provided access to those who are unbanked, or essentially they've leapfrogged because they don't have traditional banking in place. It's alternative forms of capital formation, cross-border payments. This is how you're growing local microeconomies. We've seen these use cases take place.
Yeah, absolutely. I mean, so from our perspective, right, we're clients effectively of this technology, right? So at the foundation level, we deploy both stables, and I'm sure we'll get to this point as well, but tokenized assets as well, in the service of effectively satisfying our cash and liquidity management. So these are traditional sort of forms of corporate responsible operations that happen in traditional businesses as well. Everything's downstream of having stable value. And then subsequently after that, everything's downstream of having a risk-free asset through which you can actually finance capital formation and then subsequently, obviously, business growth. And so stablecoins themselves, I fundamentally see them as, this is primitive, right? Now, Joe, you and I, We can transact directly. We don't have to go through an intermediary. I can transport from my wallet or from my account to you $1 worth of value digitally, and that's more than like this AI moment. That's effectively, maybe this analogy doesn't really do it justice, but hopefully the sentiment is met. That's moving from postal to email, right? And that's the significant sort of moment that we're in right now as it relates to what ultimately is going to be sort of mainstream adoption with moving money globally and almost practically frictionless globally.
Which is interesting because you can think about other use cases as well, talking about investing in local infrastructure as an example. If you do it on this type of network, you have the accountability, the traceability, the transparency, and as a taxpayer, that's something that you do want to see so you understand how your assets are moving around. I think that's another way to look at this as well.
Yeah, I mean, I think that there are a lot of properties of this technology that are quite powerful and that we are going to see novel applications coming in into the space leveraging stablecoins. Right now, I would say the three main use cases that we are seeing companies and individuals deploying is, first of all, the cross-border use case, right? That's, I think, very intuitive for pretty much anyone who ever done a transaction cross-border, of how expensive, slow, opaque it is, right? And stablecoins just remove all that. It's like seconds, cents, and you can see if it got to the other side or not immediately. So the cross-border is primarily the fastest moving. We have payouts, which is essentially how do you pay contractors that, let's say, are in Latin America or in Africa. That's the second one. And of course, you have people in all kind of fragile economies that are using stable coins, especially dollar-denominated stable coins, to hold accounts to protect them. But it's also fairly clear that it's very suitable for AI agents. There are a lot of demos that are extremely powerful of how AI agents can use that. That is superior to what you can do with an API to Visa or MasterCard. You have applications around transparency of government funding, government spend, where this NGOs, that this is also quite powerful. And certain applications around trade finance that I think that we are starting to see the initial kind of proof of concepts or pilots of how it can be extremely powerful in trade finance, where you have a fairly complex set of financial operations.
Yeah, and we've spoken about this before, Max, on earlier panels where people outside of the U.S., they have access to stable coins that also allows them to get access to our markets.
Yep, it's an on-ramp. We always talk about, in our other, discussions of how the U.S., in the broader, traditional market sense, U.S. is not really the only game in town, but in some ways it is. This is where all the funds are. And how do you get there? How do you access that? Again, if you're in a developed market, it's a bit easier, but again, there's still that friction to get in there. But if you have stablecoin on-ramps, so somebody in any country in the world can get access to our markets, that just builds and builds and builds, and you're growing your investor base, essentially, drives additional dollars here. So the positive for us is we're getting additional dollars. Positive for anybody else in the world is you want to invest in the U.S. Economy, the U.S. market. You have that on-ramp. It's easy. You can get it right back, and there isn't that friction. It's that very seamless process of investing, being able to get it back, transition to your own currency if you need to, but having that on-ramp and off-ramp for both is crucial, not just in the U.S., but for the entire globe.
Johnny, how are you addressing the fragmented nature of it?
It's difficult, right? And I think where we sit, again, as users of the technology, not necessarily part of the infrastructure or part of the folks that are ultimately going to solution this in the form of interoperability, right? Which I'm sure this audience is particularly used to that term, but effectively, how do you seamlessly move from network to network, right? We're one particular network, we're different from other networks. And so from our standpoint, our biggest tool that we can use is existing commercial arrangements that we already have, either with partners or enterprises and folks that we've already onboarded to our platform. And how do we sort of navigate that? It's small nudges. It's like, hey, why don't we look to pilot new opportunities where we potentially look at peer-to-peer or business-to-business transactions that can effectively really cost manage what traditionally is a friction-riddled process, right? If you think about the traditional process of satisfying expenses or liabilities that you have on your balance sheet or income statement at any given point in time, it's costly, right? And at some point, and in certain instances, certainly previously, there were moments where these transactions would be put up on your suspicious activity reports, and now all of a sudden you're waiting more than the traditional 1 to 3 days to settle a financial liability. And instead now, we can just do that business to business.
Yeah.
And so that's how we've been going about it is, one, the more folks that we get on to any network, and then the traditional network effects apply, right?
Michael, how are you thinking about interoperability and risk management, of course? I mean, we could throw security in there as well.
Yeah, I mean, I think that interoperability, there are certain solutions, and I think it means quite a few different things in this context. How do you able to navigate multiple or the same stablecoin across multiple L1s? How do you actually create fungibility between multiple stablecoins? And we've been working on integrating those solutions together. For example, we helped the state of Wyoming to issue their stablecoin, and over there there is a built-in interoperability across various L1s that we done through a partnership. From a risk management standpoint, it's kind of more interesting because we now have a new type of rail that settles immediately. We have unfortunately, a new type of bad actors that are going after that activity. I think a lot of people are familiar that North Korea through Lazarus Group are fairly active. And therefore, we need to basically build an entire new infrastructure around cybersecurity, fraud, and so on, that we were at the center of making sure that you are able to prevent attackers from gaining control over your wallets and over your funds, and protect the operators from being susceptible to phishing attacks, right, and to spoofing. That's another thing that we've been working on. And basically creating some perimeter or authenticated perimeter between the various participants that are working through what we call the Fireblocks network.
Yeah, and of course, Max, it comes back to UX, user experience at the end of the day. You want to have that experience that you're used to from legacy financial rails, and we have to remember at the end of the day, this particular sector, financial services, is heavily regulated,
yeah,
right? So the more clarity that you get around that, the more effective the integration.
Yeah, more questions get asked. What we were talking about before is, if you're in this space, it's one thing to explain and talk about it and understand how everything works together, but to get the masses involved, to really get adoption, you need that user experience to be seamless, frictionless, just like somebody is used to paying with their credit card, and then they go into their bank, and then they pay that bill with their checking account. Being able to do that seamlessly, where it's, all right, it's on auto pay, and I know how to do this. They know how to do it. They don't have to worry about, self-custody. Having those rails in place for that user experience to be seamless, that not just somebody that is well integrated with the space can handle, that the masses can handle, is going to be the biggest friction point I see in the years ahead, is making sure everybody can handle this. And it's not just you have to be technically savvy to manage your wallet and be able to manage transactions. When you have every mom and pop in the shop that can just go in, have their USDC, and you can go out and use it, or any stable coin they might have, pay for things, pay bills, Venmo back and forth sort of style. Once everybody can have that, and again, that's a lot of the user experience, which is obviously turned into a bit more of a focus now. That's where I start to see that real adoption from the general public versus, right, those that are just kind of involved in the space currently.
Johnny, we've been through this iteration once before, right? If you, yes, were an investor, you had to go to a broker's office, and it was only considered for more wealthy people. But then you have online brokers that came on in the late '90s, early 2000s, and it became accessible for the masses, if you will.
Yes.
Perhaps this is an iteration of that. We have been through this.
Yeah, absolutely. I mean, one of the things that I always sort of jokingly engage with my folks from the sort of legacy or traditional finance, right, around is when you think about traditional sort of wealth management and access to wealth management, well, it's predicated on having wealth. And this technology is fundamentally different. It's actually not top down. It's, right, it's fundamentally it's bottom up, right? This has been a technology that's been diffused on one of the most common forms of communication that we currently use, which is the internet. And the ability to put that into individuals' hands, put it into mass individuals' hands, unlocks human potential, namely in the form of creativity, and that's what I'm most excited about.
Right.
We're most excited about one, iterating downstream of the sort of onboarding component, right? So onboarding is easy. We've got millions, billions of folks that are on internet. The next component is obviously like being there in front of you with the application. Then how do you keep them? How do you sort of return them and use the technology in a way that rewards and incentivizes certain behavior in the real world? And that's one of the things that we're primarily focused on. We've got 90 plus engineers that are constantly sort of iterating at the margins on like what does the actual customer experience look like. Obviously, I use a lot of my own personal experience in the form of using my kids, using my family members, my wife, and I do this sort of test of like, hey, test this wallet out. Tell me what things like make you scream, what things make you feel, I think the kids are calling it the ick, right? And those are the things that we have to, as an industry, we have to self-police, right? Because we don't have the benefit of having 20 plus years of generating trust in the form of, you know what, I can just go ahead and upload my credentials to an Apple Wallet and now just go to a POS, and I feel comfortable doing that. But the moment that you put wallet and crypto together, I'm running to the fences.
Yeah, I guess you have to figure out what your competitive advantage is, right? Just like you would for traditional trading, what route you want to use as an example. So, you know, what blockchain you want to build on, how you want to build your infrastructure. So I think the industry is also figuring out what that competitive landscape looks like and what it will look like 3 to 5 years down the line.
Yeah, I mean, I think that there is definitely, for all the players that are coming in, also for all the players that are already in the game, to figure out how the near-term future looks like and how they build their competitive advantage is a big question, just from a strategy standpoint. I would say that, honestly, probably anyone who comes in right now is to a certain extent, has a first mover advantage, right? Because the opportunity space is so big, right? And we are still at the very beginning of the adoption of it. So I think that, in my conversations with executives from banks or payment companies, they sometimes feel that they're late, right, to the party, because they see Coinbase, they see Robinhood, they see some of those names that have been playing in this space for a long time, and they feel that they are late. But I always tell them, like, look, this is maybe, the second hour of day one in terms of your ability, and also the regulatory clarity, just stabilized
right.
in the U.S. So I think there is still a lot of opportunity, and I think that going back to the previous point, the easiest thing to create greater adoption is that there will be a nice user experience from the brands that we already have. From the, just you open the banking app that you use on a daily basis for Zelle or Venmo, and you can do a stablecoin transaction from there without them ripping you with fees, assuming that. And I think once that will be distributed, then I think there will be a major unlock. On top of it, of course, there is some competitive dynamic of like what stable coins, what on-ramps. I mean, it is still a fragmented space where you need to figure out who are the partners that you want to go with and who are the partners that are future-proof for you.
That's a good point, but Max, it also makes the deal environment really interesting, right? Sometimes growing this out organically when the technology exists by more nimble startups or companies that have been in the space longer makes sense. So I'm sure the deal environment's going to look interesting.
Yeah, I mean, M&A has been, we're seeing it in traditional markets as well, M&A picking up, that avenue for not just growth, but as an exit strategy for founders as well. That is really starting to pick up, and you see these kind of tuck-in acquisitions that, hey, we might not be good here right now, but there's somebody that's growing here. Hey, we could just tuck them in, let's go out and acquire something and build on top of that, versus the traditional having to really grow organically the entire time. There is demand from larger institutions. Hey, we need to get involved in this space. They have the money, they have capital available. They can go out and really fuel a lot of this growth themselves because they have the capital there. You're not really looking for it. They have it there. They tuck it in, kind of a head start for them versus trying to build something natively from the ground up. They have something that's already in process, already working. Give that some jet fuel with the capital that they have there to really start to build and grow. And like you said, it's these platforms that we're comfortable with, that we know, and that's a big part of it, is the trust. Who am I giving my money to? Where are they putting it? What are they doing with it? I trust, I trust you. I know what I'm doing. I'm, my Apple Card, all right, I tap it, Apple Pay, I'm good. I know that. It's second nature at this point. And it's because I know that brand, and there's the trust. Whereas in digital asset space, there's growing business, but not everybody knows them. So when you get some of these larger players involved that, potentially go out and acquire some of these businesses, you get that trust factor that you already have from them with that new technology. It's kind of that, you hope to have that seamless transition there. That's where you get real growth there.
Yeah, all right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.